La diffusion vient de démarrer. Tous les participants sont en mode écoute seule.
Hello there, everybody. Welcome to the workshop, and it is time to get started. Thank you for being with us today. We have traders attending from all around the world, so wherever you are, we hope you're having a good weekend and that you are minus any of the virus problems. These have been tough times and continue to be for a lot of folks, so I hope you and your family are safe. This is Craig at Max Trading. Chris and Eusebio are here as well, and we're very glad to include you in the Max community today. Others will be joining us later by video, and welcome to you. We're glad that you are participating. This fighting of COVID has become way longer a process than I really had ever thought it would be. But if there's a bright side to it, I suppose it's that trading is one type of work that you can do safely, even from within your own home. So maybe it's an ideal time, either way, for you to learn a very profitable trend following system. And we do enjoy having the opportunity to show it to you today. And for another value added bonus, Eusebio is teaching 3 very important trading tips today. You don't want to miss that. So we expect this will be a very helpful webinar for all of us. And speaking of value, with every passing year, the Max trading system becomes more valuable as it continues to handle the trends very effectively. We become more and more convinced of its reliability as the years roll by. So we're very pleased with the ongoing performance. More than 14 years now. We know it is a game changer for traders of all skill levels. You may be a newbie. Oh, pardon me just a minute. Sorry, didn't get my microphone turned off there and had to cough. We do know it's a game changer regardless of your skill level, newbie, veteran, either, somewhere in between. Everybody loves the confidence and the success that comes with this system. More than 2,000 traders have graduated from a Max trading course. And folks, that's a lot of training, a lot of hours, and we've learned how to do it extremely well. You will get the help that you need to improve your trading. In fact, on the 7th of April, we begin our 78th Max Standard course, where you can learn this very profitable, very flexible system, excellent in all markets and all time frames. And I do mean that quite literally. 5-minute charts, 4-hour, 8-hour daily charts, ES, YM, stocks, Forex, options, whatever you prefer, Max is your best choice for trend following trading. Very flexible, very powerful, and as well, you also get to take part in a really good trading community. Many of you will be taking a Max course with us in just a few days now, and that gives you a lifetime Max membership. So we look forward to trading with you for many years yet to come. And the Max community provides a wealth of ongoing support, unending assistance for any and every member, plus free skill building workshops at least at a minimum 2 or 3 times every month. You know, it does take fresh ideas and new techniques now and then to meet the challenges of the ever-changing marketplace. And Eusebio has helped us to meet this challenge by developing 2 unique indicators, which we have now added to every Max trading course. They are that important. First is the Enhanced Trade Format Indicator. We call it the ETF. And along with it, the companion, our Price Directional Bias Indicator. You really do not want to be trading without these 2 indicators. And all of these things put together, the professional training, correct price action analysis, knowledgeable global context, the indicators that actually work, a very supportive community, lifetime access to your instructors, wrap that all up into a package, and it gives you the perfect chance to learn trading that will actually make a difference in your life. We know that you see a lot of unsubstantiated claims in the trading world, and so We do not expect you to just take our word for it. We want you to see it for yourself. So I encourage you to plan on attending or watching the playback perhaps of the 1st of April webinar, where we'll be trading live the price action resulting from the non-farm payroll announcement, the U.S. jobs report. You'll get to see on real-time charts the effectiveness of this system. And what I really love about live charts is you cannot exaggerate and you cannot hide. Everything is right there in the open for everybody to see. So I hope you can attend, or at the least watch that video playback. And I want to thank you again for attending today. If you have questions, just ask anytime. You can use the question panel right there in GoToWebinar. We'll do our level best to make sure every question receives an answer. And don't forget the door prize drawing. That will be coming up during our Q&A time, so hang around for your chance, and I hope you're a winner as we give away a Max Trading System course today. Eusebio is the developer of the Enhanced Trade Indicator, also the companion, and he has traded the Max system himself full-time for many years now, and I'll let him tell us a little more about his background and experience, but I just want you to know he is the perfect choice to give us the details about Max. He's a phenomenal trader, a skilled teacher, and I do continue to be very appreciative of the satisfaction that he gets from helping his fellow traders. Eusebio, we're so glad that you're here to do this. We're grateful, and I'll pass the microphone along to this good group of traders.
Thank you very much, Craig, for this introduction. Before starting my presentation, so I would like to make a quick video and audio check. Do you see my screen and do you hear me well? So I would appreciate a yes or a why. So in the question area of GoToWebinar. Oh, thanks. Thanks a lot. Fast answer. I really appreciate. And yes, Iyun, you can ask any questions you want. We will not necessarily answer them immediately, but at the end of the presentation, in order not to disturb the presentation. So we will dedicate some minutes to answer every question you may have. So feel free to ask any questions. And if we do not answer your question, feel free to repost your question. We do not want question to be left behind. So, okay? And so we appreciate your interaction. So before starting presenting the Max, let me give you just a few words about my own background. I have turned 65 years old a few days ago in February. And so I am a past software engineer. I have worked in the IT industry for around 30 years and the last 15 years in the banking industry. And this has given me the opportunity to meet and to work with some traders in the banks in some countries of Europe and some very important countries in Europe. And I was until 2008 a part-time trader. I have considered investing and trading in many financial market, essentially the stock market, the options market, the futures market, and since 2000, the forex market, so the currency market. And in 2009, I became a Max instructor after the inventor of the Max trading system, Dr. James Pruitt, passed away. So his two assistants, Craig and Chris, have asked me if I would agree to teach the Max, and it has been an honor for me to accept. And at the same time, mid-2008, I became a full-time trader with the Max. So this is for me, but that's enough, I think. And now let's talk about the Max. If you are already an experienced trader looking for consistency or wanting to diversify your profits source, if you are still searching to become a profitable trader, if you are a newbie, and when I say newbie, it has not a negative connotation, of course. When I mean newbie, I mean a new trader. So needing a reliable trading system. If you want to work from home, as Craig has mentioned a few minutes ago, if you plan for retirement, I'm now considering myself so progressively, because I will try to trade as long as I can. If you are trying to get some extra income, so whatever your objective, the Max is certainly for you. And the MAX has been designed many years ago by, so as I have said, Dr. James Prewitt, known as Tiger by his student. And with the MAX, he wanted to develop, in fact, 3 ideas. The MAX is the acronym for 3 important concepts. The M of the MAX stands for momentum. And in fact, I should say momentum and volatility. Indeed, we want to open a trade when we are sure that there is enough momentum and enough volatility. The A of the MAX stands for acceleration. And acceleration does not mean we want to see the price accelerating, increasing its momentum, but we want to accelerate the profits we extract from a trend by adding progressively to our initial position in order to build a larger position. And with a larger position, as long as the trend unfolds in our direction, we extract much more profit or many more profits. And the X of the MAX stands for exit. Along the trade, as I will illustrate later, we will make partial exits, several of them possibly, and at some point along the trend, we will make a final exit. So the MAX is essentially a trend following method, and in fact it is only a trend following method. But depending on the level of the MAX can be adjusted for whatever the trading style you may have, even as a scalping system, in fact. But it is not the object today. Today we are presenting the MAX Primer and the MAX Standard level, not the 2 more advanced levels as the MAX Advanced and the MAX Sum. And it applies to any time frame, to any market, and it is completed with a very, very strict trade risk management and money management approach, which are part of the different pillars of any good trading system. So what I'm going to now to show you is some example of charts illustrating the concept of the MAX. But before that, I would like to teach you 3 tips you can apply to any trading system you are using. So if you use some portion of technical analysis in your trading approach, so these 3 tips should help you immediately to improve your trading results. And these 3 tips are the following: divergence discernment, long bars lookout, and risk reduction. And let me illustrate these 3 points with some clear examples. So this is an example of a pair. The pair is not important by itself. It is, in this case, for example, the EuroCAD. And I like the EuroCAD because for the moment the EuroCAD is performing nicely with a rather weak euro and a strong CAD due to the events we know. So the situation in Ukraine is not at the benefit of the euro, and the growing price of oil is a benefit, in fact, for the CAD, which is a commodity currency, as you know. So we have a down movement here, and when you are engaged in such a short trade, whenever you observe a divergence between the price movement and an oscillator, a momentum oscillator, then you have a good opportunity to bank some profits. And in this case, how is the divergence observed? First of all, the momentum oscillator we are using in this example is the stochastic of the RSI, the RSI in abbreviation, but you can use any of them. You can use the stochastic, for example. You can use the MACD, you can use the RSI. The oscillator is not important by itself. Many of them will work perfectly. So whenever in a downtrend you observe 2 successive lower lows, and at the same time you see the 2 corresponding lows in the oscillator being higher lows, then you have a diverging behavior between the behavior of the price and the behavior of the oscillator. And so we have in this case what we call a bullish divergence, because it is usually followed by a bullish correction. It doesn't mean that we can predict what the price is doing. No technical indicator can predict what the price is doing. This is simply what we observe. It's because the price is making some retracement that the oscillator is making also a retracement. So the oscillator is simply replicating what the price is doing, but with some nuances in its own behavior. And so when we see such a divergence, when the divergence is confirmed, we always wait for a candle to close before observing the divergence. Then we define an exit level, and if the price follow through and hit that exit level, we take some profit by closing a portion of the trade. It may be half of the size of the trade, it may be 1/3 of the size of the trade. It's up to you to define which portion of the trade you want to close in order to, first of all, to bank some profit, because banking some profit will have a very important aspect on your trade risk management. Whenever you bank a profit, so you lock that profit, and at the same time you decrease the risk on the entire position. So you have only the risk on the remaining position, which will be necessarily a smaller risk. So next time you see again two successive lower lows in the price and two successive higher lows in the momentum oscillator, you can bank another profit by closing another portion of your trade, and you repeat the process as long as you stay in the trade and you have an open position. And so in this example, we have three divergences, three partial profit taking, 13 pips in the first case, 15 pips in the second case, and 39 pips in the third case, so with the trade being closed. In our jargon, when we say an MX, it's a partial close or a momentum exit, and when we write XXX, it's a final close. And so in this example, we have 60 pips of profit representing a reward to risk ratio of 1.02 R, R being the risk we take on the trade using the Van Tarp notation. It's equivalent to say that the profit has been a 1.02 to 1 reward to risk ratio. Similarly, in an uptrend, we will compare this time the successive highs in the price with the successive highs in the momentum oscillator, but this time we want to see higher highs in the price and lower highs in the momentum oscillator. But we repeat exactly the same process. So whenever you have such a divergence, consider always to bank some profit. And so, in fact, if I have said that no indicator can predict what the price will do, and the stochastic of the RSI does not predict what the price will do, so it helps to measure or to quantify when a risk is becoming too much important. Because indeed, when we are in a trade, for example, in this long trade, what is the risk in terms of pure trading? The risk is whenever we begin to see a pullback. We never know how deep the pullback will be. It may be a small pullback, like most of the time along a trend. It may be a larger pullback, or it may be also a trend reversal. And because we never know how far the pullback may be, we need to have a way to quantify when this pullback becomes too much important, or that is to say, when the risk is becoming too much important, forcing us to leave too many pips on the table if we do not pay attention to that pullback. And so, using such kind of exit technique as a way to quantify the risk we have to consider, forcing us to consider to take some decision, reducing our risk, then you will make a good usage of any technical indicator. On this chart, you see another very important aspect of reducing the risk along a trade is the stop loss. Whenever we open a trade, we always define a stop loss. And this stop loss defines, in fact, the maximum risk we want to take on the risk. In fact, to decide the risk we take on a trade, we have to decide two data. We have to decide the size of the stop loss, and we have to decide the risk, for example, as an amount of money. It may be $100, it may be $200, or it may be a percentage of the trading account. And when we combine these two information, we know how to define the size of the trade. And then, so the stop loss will represent our maximum risk, so our initial risk. Let's say, for example, 2%. And then along the trend, as long as the trend unfolds in our favor, so we can, following some rules you will have to develop, and we have developed in the MAX. We will teach you these rules in the MAX courses. So we adjust our stop loss along the trade, and at some point, possibly if the trend is large enough, the trade will become risk-free. For example, when we make the first partial exit on the first divergence here, we take not only some profit, but we also adjust the stop loss, and you can observe that not only we have banked a 49 pips profit, but for the remaining position, let's say, for example, 2/3 of the size, of the trade size, the rest of the position is risk-free simply by this stop loss adjustment. And if we adjust further the stop loss, we begin also to lock profits on the remaining position. So the stop loss adjustment, when done properly, is also a very, very important component in the trade risk management. It helps to reduce considerably the risk we have on our remaining position. That remaining position may be the entire initial position, or it may be a smaller position if we make some partial exits. The third technique I would like to teach you here today, it is a very, very important technique, a very beautiful one and very simple one, in fact, is the concept of the long bar. LB in our jargon means long bar. When we have a long bar in the Forex market, this can indicate two types of situation. It may indicate a big momentum, but it may also indicate some weaker movement. And in the Forex market, it's not so easy to define because we don't have the real volume in the Forex market. When we use a platform like MetaTrader, for example, or any similar platform in the Forex market, we don't have the true volume. First of all, it's impossible to have the entire volume of the entire market Forex because the Forex market, because it is not a centralized market. And when we get a volume by the broker, it's only the tick volume. So the number of price quotes we receive in his data feed. And so when we have a long bar, we have to consider that this long bar represents, because of a nice movement in our profit, a nice opportunity to bank some profit should the price retrace somewhat. And indeed, once we have a long bar, we can decide an exit level if the price retraces. This exit level may represent some portion of the length of the long bar itself. It may be 1/4, 1/3, 1/2 of the size of the long bar. It's up to each trader to decide based on his or her own risk averse. So we define, in such a way, an exit level, and if the price follows through and hit that level, we make a partial exit. A long bar exit technique combined with a possible stop loss adjustment almost always provide a risk-free trade. So almost always, not always. I don't like to use the always work in trading because always never applies. There are two words I forbidden myself to use in trading, always and never, in fact. And what is a long bar? A long bar is a bar, a candle, having a length which is way, way larger than the average length of the previous candles. Typically, minimum 2 times or more, of course, the size of the average candle, the preceding candle. And so when you have such a long bar and the price retraces, you take a partial profit. And as long as you have long bar, so you can take again a partial profit. You can combine all these exits, of course, if in the same trend you have a long bar, if you have a divergence, so you can use these two types of behavior to bank some profit, and then combine with the stop loss adjustment, your trade will be very quickly in a risk-free situation, and even very often in a profitable, in a guaranteed profitable situation. And so try these 3 tips in your present trading system, and you will observe an important improvement of your trading results. Now let's talk about the MAX. What is the MAX? So as I have said, the MAX is essentially a trend following system, but it is not enough to say that it is a trend following system. We have to define more in detail what a trading system is. First of all, for us at least, a good trading system is based on 5 pillars. And each pillar is very important. If one of them is missing, so you are doomed to fail, in fact, with your trading system. First of all, we need a good trading strategy. And years and years and years of trading in the market, in all the market, have proved that the trend following system is the best trading approach we can adopt, in fact. And this has been proven many, many times during more than 1 century of trading activity. Then we need also an excellent trade risk management and money management technique. How do we allocate a risk to a trade? How much risk we accept to take on a trade, and how we handle the trade once we are in a trade. And then we have also to consider the global context analysis, because it is wrong to consider that the prices are moving randomly. The price never moves randomly. It moves based on some circumstances, simply by the fact that the traders, the big boys, the big investors are always looking for the best return on their money under the circumstances they observe around the world. And if something can represent a risk for their own position, they will not hesitate to liquidate their position and to look for other opportunities. So understanding the global context is always extremely important to trade in agreement with that global context. And I will come back to that concept a little more precisely later. Then the mindset. Of course, trading is also a psychological game, if I can use the term game. I don't like to use the term game because it's a real professional activity, but the mindset is also very important. We are human beings with all our defaults, and among these defaults we have our fears. Fear of losing a trade, fear of missing an opportunity, fear of success sometimes, and so we have to adjust our decision, not necessarily our emotion, but our decision to feel comfortable in trading, and then a good organization. This is especially the case for those traders who want to become professional traders. The organization is also a very, very important aspect. So, but it will be a bit out of the scope of this presentation today. I will focus mainly on the three first points in my presentation, so here. And so let's consider a very recent trade I have taken personally this week. It was Tuesday on I think it was the pound-yen pair. So the name has been a bit disappeared at the top of the screen. And here, the global context told me that I had to trade the pound-yen long. First of all, because the global context analysis has the consequence to make the pound strong and the yen weak. In our scrolling parties, in our practice session we have every Saturday, I have announced to our member that we should continue the yen weakening and some commodity currencies to strengthen due to the present context with the situation in Ukraine, but also the increase in the price globally, the increase in the price in some commodities, gold and oil. The pound is also depending somewhat on the price of oil. And so for almost the entire week, the pound yen has been in a position to be traded long. And so with the max primer that day, it was a pound yen, it is indicated so here at the right lower corner of the screen. So it has been possible, starting with the Frankfurt Open, to take three long trades until the Wall Street Open, and after that the pair has become worthless to trade. So 3 trades, and let's examine these 3 trades. Whenever we open a trade, so we define an entry level and a stop loss, as I have mentioned earlier, and we consider the trade is made of 2 units, so 2 parts, so 2 halves, in fact. And so in the course we teach, of course, how to calculate these unit size, but all the units will have the same size, in fact, and they will depend on the risk we allocate to the trade and the size of our stop loss. And then at some point, so we have an exit setup triggering. So what is a setup? We have 2 types of setup, an entry setup and an exit setup. An entry setup is mainly, first of all, a pattern which tells us that we may have an opportunity to open a trade. And we have several types of pattern giving us so several types of entry setups. Once we have such a pattern, an entry setup, this does not mean that we open the trade immediately. We have to define which risk we associate to the trade. Then we have to define if the trade is in agreement with the global context. We have to check some technical conditions to see if the setup is a valid one. And when everything is okay for the trade, then we can open the trade. And once we are engaged in the trade, then we look for our exit setup. We have several types of exit setup. We have exit setup based on pure price action. We have exit setup based on some indicator like a momentum oscillator. We have exit setup based on a combination of both price and momentum and indicator. We have exit setup based on time during the day, especially when we day trade. For example, when we face a very important news release, we know what to do before the news release. Anyway, at some point we have an exit setup triggering, and so we close one unit with possibly a profit or with possibly a loss. In this case, this first unit has been closed with a small loss of 6 pips. And I was left with an open unit I have closed later on the occurrence of the next exit setup, and the price has hit my exit level. So, and the second unit has been closed with a 7 pips profit. So a very tiny trade with simply a 3 pips. No, it was not 7 pips. It was, I think, 9 pips. So to give a total profit of 3 pips, representing a small rework to risk ratio. But a few bars later, a new entry setup has occurred, giving a second trade, and we repeat the same process. So on an exit setup, we close one unit, and later on another exit setup, we close the second unit, and so banking a better profit, a 61 pips profit, representing a reward to risk ratio of 2.03 R, and so on, trade after trade. At some point, so this pair was no longer worthwhile to be traded. In fact, we need to know that not all the pairs are made equal. There are some periods during the day which are more adequate to trade a specific pair. And it is important to know what are these periods for each pair. So in fact, and we did that in the course. And the rule is very, very simple. But anyway, in this case, we can see that in this uptrend, we have seen 3 trades, and the 3 trades has been profitable, giving a total rework to risk ratio of 4.05 R. In our jargon, so R, using the Von Tarp notation, represent the risk. And so how can we interpret that R notation? In fact, we can interpret it or explain it in 2 ways. It can represent a risk in terms of money. If we risk, for example, on each of these trades, total risk of $100, then the profit at the end is $405. If we represent the risk as a percentage, for example, a 2% risk, at the end of the 3 trades, we have made a profit of 8.1% profit. So these has been the 3 trades used with the max primer. Now, how do we define technically that we have to enter at this point? It is where, in fact, our companion indicator, which is indicated at the bottom of the screen, is important. We have, you can see that red and green line on the chart. This represents what we call our slow bias, our long-term companion indicator. When it is green, we are supposed to take long trade, and when it is red, we are supposed to take short trade. Of course, these trade directions represent technical direction to trade. But if the trade is in agreement with the global context, then we have a good trade to consider. And so the global context was to trade the pound yen long. And as soon as the slow bias has become green, and we have seen the appropriate pattern for our entry setup, we were sure that we had a trade in agreement with not only the technical directional bias, but also with the global context. And when we do that, when we combine everything together, especially the global context, so we have a 90 to 95% winning rate. I will explain that in a moment. So these were the 3 trades with the max primer, but we can do way, way better with the max standard level. In this max primer trade, you observe that there has been no scaling. Each trade is made of one entry, possibly a partial take profit, and then the final close when we close the remaining opened position. But with the max standard, when we include the scaling technique, which consists in progressively increasing our trade size by adding to the trade, this is another story. And this changed completely the way to trade a trend. We have the same initial entry, of course. And then we had the same, we had another, we had an exit setup at some point. The exit setup may be sometimes a bit different from the max primer because we have many more subtle exit setup with the max standard than with the max primer. And then at some point we had an opportunity to add to the trade, so to take or to make a scale-in. And so the scale-in must be made following very specific rules, because we cannot make scale-ins in a random way. We have to respect some rules in order to control the risk we take on the trade, because indeed, whenever we make a scale-in, we add, of course, to our trade in order to have a larger position, but we add also a risk which is associated with that individual entry. And so we make the first scale-in, then we have another exit setup triggering, banking some profit, then another scale-in, partial profit, scale-in, partial profit, and so on and so on. You can observe that in this sequence we had two successive scale-in entries with no in-between take profit or MX setup. This sometimes happens. And on this chart, you can see the entire movement from the initial entry to the final exit. So it has been a movement of around 200 pips approximately. And so you see also the movement each scale-in has made between the entry level and the final exit level. And when we combine all these entries and exit setup, the total profit made with this unique trade has been 794 pips compared to the 153 pips of the max primer. And when we consider these 794 pips, which by themselves tells nothing, because it's not the pips which is important, but the reward to risk ratio you make or the financial profit you make. This represents with a stop loss of 15 pips, a reward to risk ratio of 26.47 R. 26.47 R profit. This means that if you would have taken a $100 risk on the initial trade, so you would have ended with a total profit of $2,647 of profit. In terms of percentage, with a 2% risk, this trade would have given a 52%, almost 53% profit with just one trade, of course containing several scale-ins, of course, and each scale-in can be considered as a unique trade. But when combined together, it makes a unique trade because, as you can see, whenever we make a scale-in, we add 2 units in our position, but whenever we make a target taking profit, we close only 1 unit, and so we progressively accumulate open units along the trade. So, and this is the power of taking profit along a trend. Yes, Chris, please.
Hi, everybody. This is Chris, Eusebio and Craig's partner in this venture. I meant to ask you while I was putting all these together, Eusebio, sometimes when you're doing one of our trades, you can become into a guaranteed profit trade, like a guaranteed trade very early, or at least a break-even trade. So do you remember roughly around what bar the break-even point kicked in on that trade, Eusebio?
It was around the second scale-in, approximately. Around the second scale-in, yeah. So, of course, after the first target profit and the stop loss adjustment, the trade has been risk-free. But with the first scale-in, the scale-in has introduced a risk which was a bit larger than the guaranteed profit without the scale-in. And so it was necessary to take the third take profit and the stop loss adjustment to make the trade completely risk-free for the rest of the trade, in fact.
Sure. Thank you. And the reason that I brought that up is we kind of don't emphasize some of the benefits of the max enough, is that once you get to a certain point in the trade, you don't have to worry about it anymore. It doesn't matter what happens. You're guaranteed a profit from the trade. It may not be as large as 794 pips.
Correct.
But if everything shuts down, you still have a guaranteed trade. And from there on, it's just pure profit for you, and it makes trading much less stressful than wondering if you're going to be able to get out of this in time by the end of the trade to actually make some money. It's different to a trailing stop system.
Yeah.
Thanks, Eusebio.
Indeed. And this is something which is counterintuitive. We will show you and we will teach you in the Max Standard Code that at some point, more scaling we add to our trade, respecting the rules, of course, and this is extremely important, this is essential, respecting the rules, more scaling you will make, more profits and less risk you will have. So, in fact. You can also observe in this trade that the trade has been closed when the slow bus has turned from green to red. It has turned to red way before the end of the trade. This sometimes happens, but this short trade, this XXX here, the final close corresponds in fact to an entry short setup. And so when we are in a long trade, for example, and we stay in the trade until the trend reversal and we get a short entry setup. This short entry setup does not mean we take a short trade, but it will be at least the final exit of our long trade. Of course, I can show you lots of other examples. This is an example on the, oh, sorry, this was the way I have noted the chart initially, and Chris has redone the chart. So it is exactly the same chart. So this is another pair, an example with the pound US dollar in a downtrend this time. So in this downtrend, so two short trades with the max primer with similar result and with the max standard. So one unique trade with several entries and several partial exit with different notation. Of course, the profit was not as important, but it was still a very nice 9.3 hours or 18% profit, with a risk of 2% per trade. And so I can show you a lot of examples. This is an example of an index, a stock index, the Dow Jones, in fact, with the max primer, 3 winning trades. And you can see the result, 2.5 to 1 reward to risk ratio. And with the max primer, the same trend, one unique trade with several entries and exit with a nice 8.86 to 1 reward to risk ratio. And I could show you many trades. This is gold, long trade, and with the max primer. I can show you lots of examples. I have hundreds and hundreds and hundreds of examples I could show you, but every day the market will give you such opportunities. So the Max course will provide you the necessary knowledge you will have to acquire to become profitable with the max trading system. And I will teach you why the methods we are teaching and the concept we are teaching are working, and they relate to the way the big boys are moving the market, in fact. And this is the experience I get by working with them, so in the banking industry for around 15 years. And with our Max course, so you will get training and support to develop and reinforce your trading skills and your money management. And when I say trading skill and money management, I say also the mindset we need to have. We don't need to fear if you get a good trading process. And it's the process which is important. It's not the fact that once you take a trade, the trade must be necessarily a profitable trade. We don't have a 100% winning rate. We have some losing trade. If we do not take into account the global context, we will have around 70-75% winning rate. And unfortunately, many traders consider that when they get a losing trade, it's a catastrophe. But one trade does not make the trader and does not make the trading system. So the Max course will provide you the confidence in your skills, because indeed it is important to develop several levels of confidence. Confidence in the market itself, in the possibility the market will give almost every day. The opportunities are plentiful. Many more opportunities you will be able to handle. Confidence in the trading system itself, in the way to capture most of these opportunities. And confidence in yourself, in your ability to apply the concept and the rules of the trading system. And so we develop these confidence, or we help you to develop these confidence and these skills through our mentoring, so training, but also through the homework we provide at the end of each session, and we insist on the fact that the student make their homework, which will be graded in detail for each homework, and the free workshop or practice session or scrolling parties, as we call them, we provide freely each weekend. So especially the Saturday evening in my time zone, so in Europe. And so today we propose you two available courses, which are the Max Primer and the Max Standard course. The Max Primer is simply an introduction to the Max, but it is still a viable trading system. But the Max Standard is our flagship course with all the details about the trade risk management and the money management, the scaling technique, and the mindset we need to have to apply the Max correctly. In order to help our trader to apply the Max successively and to trade in agreement with the global context, we provide also for free lots of information. And not only to the Max community, but to everyone who is interested in so. We have a website which is called www.maxtradingsystem.com/newswatch. And I think that probably Chris or Craig will write the link of this web page on the chat area of GoToWebinar. So it's a page everyone can access freely. If you want to know when this page is updated, you can put your first name and your email address. And we update this page every week, once a week, on the Saturday or on the Sunday. And so we mention a list of geopolitical elements we have to consider seriously, because if there is an escalation, for example, in one or several of these geopolitical, this may have a deep impact in the market, in any market, in fact. And we have lived for several years a very important geopolitical event with the Brexit. We have lived, and we are still living, an important geopolitical event with the COVID, and we are living now a very important and serious geopolitical event with what is happening in Ukraine. So, and with the tensions between Russia and some of the Occidental countries, especially USA and the NATO organization. So, we provide also a simplified news calendar. We call the news watch list, in fact, because all the news are not important at all. There are many, many news a lot of people are talking about, but which have never effect in the market. And in the Max Standard course, we teach you which news are really important and how to interpret these news. But in our news watch list page, we mention the news which are really important and what kind of impact they may have. Then we provide also what we call the top pairs list. Because the Max is a trend following system, it's better to trade the trending pair, because not all the pairs are trending. If you consider the main 8 currencies, so the US dollar, the euro, the yen, the pound, the Swiss franc, the Canadian dollar, the Australian dollars, and the New Zealand dollars. So you have 8 currencies, which forms 28 pairs. Not all the 28 pairs are trending. If you consider a pair like the Aussie Kiwi, this pair never trends, or it's very rare that this pair trends. And so we give the top 10 or 11 best trading pairs every week. And then after that, for each day of the week, when we match the top 10 pairs list with the news calendar, we can provide for the coming week all the pairs which are worthwhile to be monitored and trading for each day of the week. So all these information are provided for free to everyone interested in. And then under a specific but very cheap monthly subscription, we provide also what we call the global context bias, or the Max bias advantage. First of all, a short term for day trading, and then for a pair of instruments containing around 17 pairs plus 6 stock market indices, 3 in USA, the S&P 500, the Dow Jones, the Nasdaq, 2 European indices, the German DAX and the FTSE 100 in UK, and 1 Asian stock index, the Nikkei 225, and then 2 commodities, crude oil and gold, and then the bond market with the 10 years treasury bond in USA and the euro bond in Europe. Plus, we also provide the S&P 500 VIX. And so for each of these instruments, a few minutes after the London Open, I provide a directional bias made with green up arrow or down red arrow. Green up arrow means that we have to favor long trades for the specific pair or instrument, and down red arrow means we have to consider preferably short trade based on the global context analysis. And then I provide the same kind of information for long-term trading for those traders who prefer to trade on higher time frame, starting with the 4-hour time, the 4-hour time frame, daily time frame, weekly time frame, or any higher time frame we can build with within MetaTrader. So just in order to finish my presentation and I give the mic to my friend Chris, let me give you some result we can achieve with the MAX. So in fact, if we do not take into account the global context analysis, so the MAX bias advantage, the winning rate of the MAX is around 70 to 75%. And so the winning rate jumps to 90-95% when we use the MAX bias advantage. We make less trade, but we trade better, in fact. And so now let's see a little more in detail the result of the two courses we propose you today. With the MAX Primer, for each pair, we will have between 3 and 5 trades per day. It depends on the market conditions. When the pair is trending, and believe me, the pair trend more often than you may think. In fact, in the course, I will teach you the concept of a true trend. What is a true trend? And a true trend will happen between 2 and 4 times per week on average per pair. And so this gives us enough opportunity to trade. And so we may have between 3 and 5 trades per day for each pair. When we get a winning trade, on average, a winning trade provides a profit between half and 1 hour of profit. Your financial profit will depend on the risk you take on the trade, of course. But when we have a losing trade, of course, because we will have a losing trade, we don't have a 100% winning rate. So the average loss will be around minus 0.2 and minus 0.6 R. So, and you can see that if you take into account the winning rate and the average profit and the average loss, you can calculate the expectancy. So the expectancy is positive, which is extremely important. So for the MAX standard method, we will have a little less trade, of course, because we try to catch a unique trend along which we will make scale-ins, but we may still have, depending on the market condition, between 1 and 3 trades per day, and a winning trade on average will produce a profit between 2 and 5 R, which is important, sometimes more, as the example I have shown you with the pound yen a few days ago, 26 R of profit. And an average losing trade is similar to the MAX Primer with a loss ranging between minus 0.2 and minus 1 R. So, and again, if you calculate the expectancy, you will see that the expectancy is very, very positive. So this is the presentation of the MAX trading system itself. So of course, at the end of this webinar, we will be glad to answer all questions, but I see that Chris and Craig are also answering some of your questions. But now Chris has very important information, additional information to provide you with, and so I give the mic to my friend Chris. Chris, it's up to you.
Thanks, Eusebio. I presume you can hear me okay. So can I have the next slide, please?
Yes,
Thanks.
perfect.
So, hi, everybody. I'm Chris. I'm based in New Zealand. So the MAX is kind of splattered all over the world. The sun never sets on us. Eusebio being in France, Craig in the States, and me down here in the South Pacific. Like Craig said, this is our 78th set, and we've trained over 2,000 traders so far. And the average age of our students is kind of 50 plus. So the reason I brought that up is the people that come along to us are committed. They're not just people that just want to try things out. This is real stuff. Next slide, please, Eusebio. They're in it for the long haul. Thank you. So just to recap and to let you know, to remind you, there'll be the prize giveaway once I've finished my speaking side of things, and then we can have some questions and answers. And Sally has already asked for to go back over the slides on the gold and the Dow Eusebio to have a look at some future stuff. So just a reminder. So what we've been through so far is Eusebio went very quickly through the long bars, the divergence and risk reduction. It would pay to go back over them, but we go into those in a lot more detail in the courses themselves. He showed example charts with all the profit boosting that's built into them, and a lot of the results were 3, some even over 6 times more profit in them than just a regular buy and hold sort of moving averages crossed, or this pattern works out, get in here type trade. We've displayed everything using the 5-minute charts because those are the charts that we trade the most, and those are the ones that we find the most profitable for us. If you have to trade, if you're at work and you need to trade longer time frames, then there's no problems with that. The max still works. It really doesn't matter what time frame or what chart type you're using. Like if you're using something like a Renko or a CRB or tick or second charts, it still works in the same way. All the principles still apply. As Eusebio showed you on the Newswatch page, we've got a whole pile of free information that's there for non-maxers. And if I'd had that sort of information when I first started out, I would have saved at least one of my accounts from being destroyed, because a lot of the times people just don't know which pairs to pick and when to avoid trading because of the news coming up. If you look at Forex Factory, there's so much information there, it's just kind of overload. So every week we condense it all down so that you you can focus in on stuff and get the best information out. Eusebio also produces price levels for different pairs in some of the instruments. And we give away 4 of those each week. Eusebio produces them for 4 pairs. And if you want, you can just sign up for that and grab them. So what I'm going to go through now are the course features and benefits, the pricing, it's the important bit, and then Craig will come in with the prize giveaway. And if you've got any questions at the end of that, we'd be more than happy to answer them for you. Next slide, please, Eusebio. Okay, so I guess what you're all here for is financial security or some way of making money so that you can, everybody's got some different reason for why they need the money, but basically to keep on living and at a good standard. And using the max, you can produce that for yourself as part-time or as full-time income, just depending on whatever your requirement is. Next slide, please, Eusebio. And the question is, how are you going to do it? If you're already trading, you might have, and you're here, it's because you're trying to pick up some new ideas, or maybe your existing system isn't working that well. But what we're providing here is a really structured professional system. Eusebio has been trading in the trading business for decades now, and has refined Jim's system down so that it's very precise, so that we end up with consistent results. There's really not that much subjectivity in here. We do have a few areas where you can decide if you're going to get out now within 5 pips or not to see if the trade's going to move or not. But most of it is pretty much rules-based. So if this happens, then this happens. We supervise a lot of the work, and we do that by giving you feedback and asking you to do homework. And I'll hammer on that a bit shortly. But next slide, please, Eusebio. Thanks. So what you're probably finding if you're trading, or if you haven't started yet, is that it's hard to find out when you should be in the trade. These days, the past few years have been really tumultuous. Brexit making the pound jump all over the show. COVID making it scream, and then incredibly tight ranges, and then certain people sending out tweets all the time, making sudden large movements. So the price action has not always been that great. trying to figure out what direction you should be trading in is kind of a nightmare at times as well because of the choppy movements. And some systems are very imprecise about the way they tell you, oh, you should be entering when these moving averages cross. Well, do I enter when they cross or just afterwards? What happens if they uncross? What do I do in that point? So some of the information is really imperfect, and the indicators aren't all that good either. And there's the details for the coming off the charts are generally quite simple or quite basic. There's a big picture, lots of hand waving, but no precision with this. So next slide, please, Eusebio. Getting all choked up. So the way the max overcomes all this is that the max itself adapts to the price action. So we're able to train you, tell you how to defend exactly what a trend is in a breakout, what to look for in chop, how to trade counter trend. And when we have a trend kicking in, we will know within 2 bars, using the help of the indicators and the price action, within 2 bars if you're in a trend or if you're not in a trend, or if you've turned into a consolidation mode, into a consolidation zone. So we're quite precise on that side of things. We've got a lot of setups in the standard course. We've got, I think it keeps changing between 7 and 11 different entry setups to take account of the different movements. Plus Eusebio has just done a mini course a couple of weeks ago where he has brought out another 2 or 3 different entries to sort of complement these ones. So there are plenty of movements to do. The primer doesn't have quite as many entries, and I'll show you that in a minute. But the max is also very nimble because it uses price action to actually get in and get out of trades. And if you remember back on those charts, and we can go back and show them, Eusebio has produced a companion, well, he calls it the companion bias, the slow and fast bias indicators at the bottom of the chart to tell you which direction you should be trading in. They're really good for lining you up in the right place. If you go against them, it's at your own peril kind of thing. And a secret weapon that Jim developed about 15 years ago, dynamic support and resistance levels. I've not seen them on any other chart, and if that's all we had to trade with, it would you could still trade just with these almost. They're really amazing. They tell you how far price has gone if you're getting into a risky trade because price has moved too far at this point and is possibly going to come back on you. And it gives you an idea, a really good overview of what the chart is up to when you start your daily trade. And it also tells you when you should be getting out of the trades, when things are getting sort of really overbought or oversold, along those lines. The other thing that Jim produced with the Max and Eusebio has built on hugely is the money management side of things and the risk management. So when you get into a trade, we're really risk averse. So we want you to protect your money as much as possible. And sometimes it's a bit of a pain because, oh, I could have gotten in that trade and it looks like it went really well. But Eusebio said not to take it because it's risky. So, and most times he's right on the money with that sort of things. Sometimes you miss out on good trades, but most of the time you'll miss getting into a bad trade, which makes you lose money. So we are really risk averse. And as Eusebio said, when you're trading with the standard, the more that you scale in, the less risk there is. And at some point on the trade, most times it becomes a break-even guaranteed profit trade. It's pretty amazing. Even if the stop gets hit, it's still a guaranteed profit situation. Makes trading very less stressful. Thanks, Eusebio. Next slide. And on the training side of things, when we go through it, or when Eusebio goes through it, he's the prime trainer, he will show you precise and detailed setups. So I think it was Sally, no, it was Andrew asked about it. I put a reply into the chat area. But when we have our setups, we look for a price pattern. We make sure that the indicators are supporting it. And then we look for counter entry indications to make sure that we're not coming up against something. And there's a slew of other things to take into account, but the setups are very detailed. And typically on a 5-minute chart, if you're trading in the Asian session, you might be getting into a trade. The bar will close, your setup has been confirmed, and within half a pip, you're in the trade. It's that precise. In the London session and the US sessions, there's a bit more movement there. They move a bit faster, so it could be 2 or 3 pips before you get in. And similarly for the exits, if you see an exit setup, then within 1 or 2 pips, you're generally out of that particular trade. And just back on Andrew with divergence, if we find a divergence setting, we don't say, okay, now's the time to get out. We wait for price to let us know to get out. Price has to move against us like 2 or 3 pips before we actually get out. Okay, and that's on a 5-minute chart. As you go up through the timescales, those tolerances get larger. Okay, we use hard stops whenever we place an order, and that's mandatory because if suddenly your power goes out or you can't access your broker anymore for some reason, you have to make certain that your account isn't going to be drained just because you can't access it. So the hard stops are always there. And then we also have the trailing stops or mental stops as the price goes to manage your trade and keep your profit at a good point. Really important with us is we have homework. We ask you to do homework. It's not compulsory, but it will really speed things up for you. You'll be able to get your hands dirty with the trading and get to know how things work much faster by doing the homework, and just deepens your learning. The reason for the practice is that it will highlight different things. Perhaps you've missed out doing noticing a particular type of divergence, or you may have come into a trade before the London Open, just before it. We don't recommend that you do that because it tends to get a bit jumpy around that time. So all these sorts of things, a third person, when they're looking at you doing your homework, can say, hey, you forgot to do this, or you missed this, or you're looking at this around the wrong way. And so you're getting feedback straight away before you're actually putting money on the charts. You're not gambling, you're learning at that point. And there's been lots of times, and Eusebio still does it to me, when I think, oh, I've got this right. And Eusebio says, no, Chris, pay attention. It's this way. And the thing that I thought was correct is incorrect. And it's only a third person coming in from the outside actually says that, sort of points it out that you can find out about these things. It's kind of like a Dunning-Kruger effect, if you think of that side of things. So in the homework, you send it in a chart and then you get personal feedback. So most of the times I do the homework grading side of things, and I tend to go through it bar by bar and sort of analyze it that way. And each weekend as well, this is part of the course, we run practice sessions. Primer don't have quite as many, Standard have more, and the advanced people have pretty much a practice session each weekend. It's the same session, but it's just more or less people are invited to it depending on the level of training that they've had. And for Maxes that are listening at the moment, we've got a practice session tomorrow, or a workshop session tomorrow at the normal time, 4 p.m. So it's Sunday instead of Saturday. And the videos are made of those each week. And what you can do in those is you can ask Eusebio whatever question you like, and generally he'll give you a reasonably good answer. And you can send in your charts, and we will go through it and analyze it bar by bar, and in some cases tick by tick if it's a really interesting movement. And we provide lots and lots of after course support as well. For instance, last year, not so much this year yet, but I was doing homework from people that had done the course back in 2010 or 2011. It was quite a bit. Hey, Robert. And what else? Okay, that's it. Next slide, please, Eusebio. Sorry, Robert asked about a magic indicator. The magic indicator is in the standard course. It's Jim's dynamic support and resistance. So what you get with your training is everything. There's nothing extra that you need to buy. We do have a few extra bits and pieces that you might like to purchase, but they're not required. So you get all the indicators, the templates to set them up, lots of examples, videos. Eusebio will give you all the setups. He's a pro. If we told you some of the trades that he was able to pull out, well, we don't, because it would they're a bit astounding and they sound kind of outrageous, so we don't mention it that much. But once you come on a course, you might see them, and we will provide one-on-one guidance bar by bar. If you're having troubles with anything, then we're there to help you, and it doesn't matter when you ask. You'll have pretty much lifetime access to all the course materials and support, the weekend practice sessions, occasional live sessions, and incidentally, because you're watching this or you received the video, you've also signed yourself up for the non-farm payroll session that's on this Friday, when Eusebio will go through live trading the non-farm payroll. And hopefully it's a good movement. If it's not, and it has not been good several times over the last couple of years, he'll force a trade and show you what it's like to try and make money from it, and how we would get out and protect yourselves. So the idea is not to make a profit from the non-farm payroll if he's having to force it, but to show you how we work our trade management if you get into a poor trade. Okay, and like you said, these are the free things that we give out. The best pairs to trade, news to avoid, news to watch for. Say the non-farm payroll is one that you can sit around and perhaps make some money from, and the free price levels as well. For those of you doing the training, we use MetaTrader. We use it from a particular broker. We don't recommend any brokers, but we just use one particular broker so that everybody's charts look the same. And MetaTrader is free, and the data feed is free, so there's no charge for anything like that. So when you pay for the course, everything is included in it. Next slide, please, Eusebio. Okay, so Eusebio went a bit through the what the win-loss result was. You can go back to that chart if you're watching this by video and have a look. So around about 65 to 85%. It can be even higher if you're using the higher timeframes. And the average drawdown is about half of what you risk. So if you're risking $100 on average, and you have if you count up all your losers, on average, they will lose about half of that. The average profit depends on which I've got to change that, which course you've taken, but the average profit is between, I can't remember anymore. Sorry, it's early morning here in New Zealand. Haven't quite woken up yet. Let me find this thing. I'm just quickly going through. This is not good, is it? Where is it? Yeah, okay. The primer system will give you about 50% to 100% extra profit based on whatever you risked. So if you risk $100, you make, say, an extra $100. And on the standard side of things, whatever you risk, like for instance $100, you will make 2 to 5 times that amount using the standard method. So much more than the primer. And okay, primer course. The primer course is a subset of the standard, so we run them both at the same time. The first two sessions of the standard course are the primer course. So there's a couple of entries in it and a couple of exits, and then the primer course finishes, and then we carry on with the standard course with a whole lot more entries and a whole lot more exit techniques and criteria for managing the scale-ins. So the primer doesn't have any profit boosting, and it's a very simple, well, I shouldn't say that. It is a huge amount of detail in it. We thought when Eusebio was going to produce the primer course, we'd use it as just an enticement into the standard, but he's put a lot of information in just the primer course as well, because when you're trading, you need a lot of information to trade. This is a business. It's not just two moving averages crossing and get in. So the primer course is very substantial, but it's a subset of the standard course and it doesn't have the profit boost. We'll supply you with as much support as you ask for, and what you end up with is something that you can rely on, something with the standard that will really, really boost your profits and get you to where you want to be much faster than if you just stick with the regular systems that people are selling out there. And if you've already got a system, people have used our scaling in techniques and our exit techniques, the trade management side of things, to complement their existing systems. Had one gentleman who, within a week or two, he'd been trading professionally for quite some time, really started using the scaling in system within 2 weeks of taking the course, and was starting to produce sort of like 5 to 10 times the amount that he normally made. But he was a kind of like a trading addict, but he used it to add on to his existing system. And what we really want you to end up with, the real benefit to you, is that you become wealthy and have independence and security. These days, with COVID and possibly the war in Ukraine sort of blowing up, you really need independence these days. Inflation kicking in, it all is making things a bit more uncertain and secure than it has been in the past. So we've got a really good system that can help you overcome that. Next slide, please, Eusebio. Thanks. Okay, so here's a comparison of the two courses. Max Standard on the left, Max Primer on the right. So Standard runs for 7 sessions, Max Primer runs for 2 sessions. We actually do a bonus session for each of those at the end of it. Eusebio runs through walkthrough trades, but okay. The Standard has multiple entries and exits, and the Primer has just got like I said, a couple of basic entry systems and 2 or 3, 4 exit capabilities. So it's very much cut down from the Standard. And then once you're through the Max Primer part of the Standard course, moves on to the profit acceleration. And if you look back over those charts that we went through, most of those charts were way over 300% extra profit, but compared to what the Primer produced. Some of those were 5 to 6 times more money from them. And if you're able to produce that on a regular basis, you don't have to be trading every day, but just every now and then, like every second day or something like that, you're going to, like COVID, really have a hyperbolic curve in your account for making money. Okay, and on the Standard side of things, it has that exceptional trade and risk management where you can really protect your money and really increase your profits at the same time. The Primer is safe. It's got basic risk management. We still don't want you to lose money on it, but it doesn't produce as much money as the Standard, and it doesn't have quite all the risk management that the Standard does either. But it's still safe. Next slide, please, Eusebio. It's just going to take you a lot longer to get where you want with the Primer, much longer. So, and can you go to the next slide, please, Eusebio? Yep. Okay, thanks. So this is because we dropped the slide. So the Max Standard course will start on April the 7th, and it runs for 7 weeks. Normal price is $3,000. The webinar special is $2,399. And the Max Primer for absolute beginners also starts on the 7th, 7 hour, and normal price is $300, just over $300, and we've got a webinar special for $159. So those are the 2 courses that we've got running. I really recommend you take the Standard course with all its extra benefits there. It's going to pay you back much faster than the Primer course. And next slide, please, Eusebio. And the links for these should be popping up in the chat area pretty soon. Oh, no, sorry, back, Eusebio, thanks. So that was the end of my part of the presentation. If you have any questions, then I'll we can answer them. But Craig's going to come on now and tell somebody who is the lucky winner of the course. And you have to be in the room to win. So we've had some people that just haven't paid attention and have lost. Sorry. So Craig was just answering somebody, Ian's. So while Craig's...
Okay.
Oh,
Thanks for delaying a second, Chris. I needed to finish that answer.
Sure.
Okay. Want to thank everybody for staying with us to our Q&A time that's coming right up. That should be helpful for a lot of folks. And yes, I do have our prize winner ready. I need to turn this speaker down a little bit. Okay, there we go. We have a very lucky attendee who has won the Max Primer course with a lifetime Max membership, including our rather unique never-ending access to support and ongoing training. And the winner today is Moses E. Moses, are you in the room? Would you please let us know in the question panel there? Moses E.
Moses is in the room. If you can go to the GoToWebinar panel and hit the hand or type a yes or something like that. And
anything to let us know.
Oh, there he is.
All right, Moses, congratulations to you. I'll be in touch in just a little bit here, and we really look forward to seeing you around the Max community. Thanks, Chris. Oh, wait. Let's do this for everybody. It's already been almost an hour and a half, and we know that's a bit long. I really appreciate you staying with us. So let me say thanks this way. If you're in the room right now, and this will not be in the video playback, it's just for those who are in the room right now, I'll add this for you. Purchase your course within the next hour. Let's say before 5:30 Eastern time. If you can make that deadline, I will send you an immediate, well, not quite immediate, allow me about 20 minutes because sometimes they get a little stacked up with PayPal, but I will send you a very quick 10% refund on either course. So that's just if you're in the room right now, you already know you want to learn the Max system. Here's a little extra bonus for you. Thanks, Chris.
Okay, thanks, Craig. So if you purchase now, you get 10% off. And Craig will refund PayPal for you on that side of things. And we've had some questions come through. One is from Sally, who said, well, one of the questions we've had is, do we only trade foreign exchange? And no, we can trade any instrument market, any instrument or any market. And Eusebio's had a couple of charts, if you want to bring them up now, Eusebio.
Yeah, sure.
One was Dow, and that was slide 20. That you're able, oh, okay. And you also showed the gold there. Well,
yeah, this is an example with the Dow Jones, and an example with gold, which is a commodity. No, I don't have example of bonds, Max, because I don't trade bonds myself. But you can trade bonds exactly the same way. Now, of course, with MetaTrader, you cannot trade directly the futures contract, like the YS for the S&P, the YM for the Dow Jones, and so on and so on. But what you can do, you can trade them on another platform like NinjaTrader. NinjaTrader is a well-known platform in the futures market. You can trade also with TradeStation, for example. And for NinjaTrader, if I'm correct, I think we have all the Max indicators available for NinjaTrader number version 8.
I think so, yes.
Yeah, I think so. But I'm not 100% sure, but I think we have the indicator. And we have some of them for TradeStation. Not all of them, but some of them. And what we can do is, if you have the way to code yourself your own indicators on a specific platform, we can provide you with the source code of the indicator. So In such a way, you are not paralyzed by a specific platform. What some other traders I know are doing is they make their analysis on a MetaTrader platform and then they execute their orders on their trading platform. It may be TWS, for example, if they trade with Interactive Broker. It may be NinjaTrader. It may be TradeStation, SmartChart, or any other platform. So.
Okay. And another question. So I think, Sally, that answers your question if you want to ask more. The difference between the foreign exchange, trading foreign exchange and trading the futures is foreign exchanges, it's got a very flexible money management side of things. So you can, depending on your broker, you can almost go from 1 cent trades up to however large your account is. Whereas with the futures trade, you have to do it in clumps of like $6 or $12. So that modifies the money management side of things a little, but the actual setups and the exits and everything else that goes along with it, the basics are still the same with the trading on that side of things. So I hope that helps.
Unfortunately, we are seeing a very positive evolution in the futures market, at least for the retail traders like us. We are seeing for some time now the appearance and the possibility to trade micro contracts, so which is a good point. And this will make also the market a little more liquid and accessible to many more traders, in fact.
Cool. Thank you. And Andrew asked, do we always trade off the 5-minute chart?
No. Of course, when we are expert in the max, trading the 5-minute chart or even a smaller time frame with the maxam is the most profitable way to exploit a trend. But you can trade any time frame, and in fact, what I advise to every trader is to adopt a time frame which comply with your own time constraints. For example, if you have a normal job, what we call a 9-to-5 job. Of course, it may be difficult for you to trade during your work time, and so use instead a higher time frame, the 4-hour time frame, or an 8-hour, 12-hour, or the daily time frame. The time frame is not important. Every time frame is good. So all the time frames are good time frames to trade. So choose the time frame which best suits your own time constraints. If you want to become a full-time trader, then a smaller time frame, 5 minutes, 15 minutes, 30 minutes, why not? I have started myself trading with the 30-minute time frame, so it's a good approach.
Okay, and there are slight differences between them as well, I have to say. Like on the 5-minute chart, you sit there watching it because it happens reasonably quickly, and you can decide if you're going to place entries or not within while you're sitting there watching the chart. But if you're trading the 4-hour chart or a daily chart, then you have to set yourself up with alarms and alerts so that you know when prices reach a certain point. You kind of have to decide, and you have the time to do it, but you have to do more work deciding ahead what's going to happen if price goes down so far and if price goes up so far, if you're going to be in or out or that sort of stuff.
Yeah.
Whereas on a 5-minute chart, it's more reflexive. Yeah. Okay.
Max, now to see you back. I remember your name, indeed.
Okay, and Andrew, I think, no, Ian. On average, I think Ian's question is, how long does it take to learn this?
Oh, it depends on how much time you dedicate to learn the trading system. It may be a few weeks, it may be a few months. It depends how much time you can dedicate. If you can dedicate 1 hour a day, so you will master the max very, very quickly in just a few weeks. So,
and we're here to help you as well. So if you send your charts in, and that's what the homework's all about, we can sort of keep you on the straight and narrow for as much as you want. The practice sessions on the weekends, we can unmute you so you can talk directly about the charts that we're talking about or ask questions that you don't understand that we've been talking about and get more full answers on those ones. So we're here to help you as much as you ask for, really. Yeah.
Yeah, and what we observe over years is the following phenomenon. More you participate, for example, if you make your homework systematically, if you make your homework after the end of each training session, if you participate to our practice session every Saturday in an active way, never be shy to give an answer to a question we ask during this practice session. You may have a wrong question after all, but then we will tell you why you are wrong. And when you know why you are wrong, you have learned something positive. And so if you are active in your learning process, you will evolve very, very quickly. So it depends on your own motivation. Remember, trading is never a game. It's never a hobby. If you want to make money with trading, you need to consider that activity as a professional activity. And so you need to act as a professional. I suppose that in your normal job, if you have to follow some training to improve your knowledge, to improve your experience, to improve your skills, you do that investment. So it's the same thing in trading. There is no difference at all.
And if you're going for a job that's going to pull in 100 to 300K a year kind of thing, how long did it take you to get to that point? So
yeah,
trading is very similar.
Yeah.
Another question, David has asked, I heard it works on NinjaTrader. How about eSignal? We haven't got, I don't think we've got any indicators anymore that are relevant for eSignal, but like Craig has replied, if you've got a platform that you want the indicators for, then we can give you the source code, and most of the indicators are pretty much available on most charts. We can give you the source code so that you can get them recoded into your particular platform. Okay. So Max had said, now I'm getting back in. Okay. If Max, if you're returning, sorry, we didn't actually speak about this, but if you want to retake the courses, there's a massive discount, something like 75% for the next three courses that you take. And then after that, you can keep retaking the courses at no charge. So whenever we run a standard course, we have all these free people hanging in there as well. And if they want, they can keep doing their homeworks as well. Thankfully, not many do because it takes a long time to get through it all. But it's really worthwhile. We've had some people have retaken every course that we've done, and not missed any. And generally because one, they want to be kept up to date with what's going on, but the market also keeps changing, and Sabio keeps coming up with new ideas or new tweaks or things to watch for in the market itself. Plus, over the years, he's developed the ETF indicator for detecting fast movements and the bias indicator for detecting where the setups you should be looking for, what direction the setup should be going in. So the market keeps changing, and we keep tweaking things a bit to accommodate to the market. So by retaking the courses, you're kept up to date with things. Plus, there's the other thing is that when people learn something, generally they start forgetting what they've learned and start remembering things that they weren't taught, and go completely off the rails and think, yeah, I'm still doing the max, but it's not the max that was actually taught in the first place. So by retaking the course, you're kept on the straight and narrow, essentially. Okay. Other questions? No. Okay. Ian also asked, do we have to wait for the white arrow to form with the close of the bar? And Sabio, do you want to talk about those arrows? I've got a couple of extra questions.
Yeah. When you see on this chart a white arrow, a down white arrow, or an up white arrow, this indicates when our two ETF lines, these two lines, yellow and orange, are what we call our ETF line. So the arrows simply indicate when they cross. They are not entry setup. And so an arrow will begin to appear when the line begins to cross. But of course, we have always to wait for the candle to close before seeing things fixed on the chart. But I repeat, these arrows are not entry setups. They are part of the conditions we have to consider when we analyze a specific entry setup. So,
Sally has asked, EFT indicator is for options only. No, Sally. The ETF indicator is for all, it doesn't matter what platform. It gives you an indication of what way price is going. So if we've got a setup to go long and you want to do some sort of, I used to do options, what do they call them? Flying eagle condor with a duck or something, because you know that the price is moving in that particular direction, then you can just place that whatever option trade is on it based off our setup conditions. So yeah, it's not just for options. I don't know how you managed to get that one. So if you want to re-ask the question in case I don't understand it fully, I tend to do that a lot.
I interpret the question on two different ways. Are the ETF lines an options? No, they are part of the trading system. They help to define some conditions to have a valid entry setup. And the second interpretation is the option market. And so the option market is a specific market. In fact, if you want to trade in the option market, you have to first of all analyze the underlying instrument, for example, the stock. And it's only the analysis on the stock which will help you to trade the options, the corresponding options series. Yeah, it works also on future. Yeah, indeed. It works for any instrument. Let me show you in my trading platform. So here, let's take.
I see. It's come from Eusebio. It could be that ETF. We got kind of smart with ourselves calling it ETFs because that's a different.
Yeah, indeed. There are tradable instruments which are called ETFs I don't remember the exact definition of the ETF. They correspond to some kind of aggregation of instrument into one unique instrument. An exchange trading format or future or something like that. Yeah. So if I take, for example, exchangeable trading funds. That's correct, Ralph. Indeed. No. In our case, ETF means extended trading format. It's unfortunate we have chosen that term to represent our lines, but so it is the way we have called that. For example, here I have the euro-yen pair, but I can take, for example, a commodity. Let's take, for example, gold. And so this is, in a moment, the price of gold will appear. We have the gold chart, and we analyze the gold chart exactly the same way. I can use, for example, crude oil. And so the crude oil will be analyzed exactly the same way with the same indicators. I can use the Bitcoin, for example, And so once we have the Bitcoin, we analyze the Bitcoin exactly the same way. The same entry setup will appear, the same exit setup will be used. So, and if I use an index, for example, the S&P 400. So,
I'm surprised you used Bitcoin and didn't burst into flames.
Yeah, because the Bitcoin is part of the max price levels, Chris. And so we analyze exactly all the instruments the same way. As long as you have a tradable instrument with enough liquidity, with enough volume, and so which can trend, of course, you can analyze this trend with the max. What is important is to understand is the following point, and I'm going to give you a small secret. So here, the max trading system is a trend following system. This requires to trade instruments which are trending, not always, of course, but which trend enough to be profitable. And of course, the max trading system is based essentially on some technical indicators. But most traders who are using technical indicators do not really understand how to use these indicators and use an opposite methodology. In fact, you have to first of all define what kind of movement you want to catch. Once you have defined what kind of movement you want to catch, then you have to select and parameterize the indicators which will help you to pinpoint these movements. Of course, because nothing is 100% perfect in trading, when you will assemble some indicators and you will parameterize them as correctly as possible, knowing that an optimal parameterization does not exist, so it's a false problem, you will not get all the movement. Sometimes you will get also small movement, and this is why, in fact, the trade risk management and the money management will be extremely important. And so this is why among the 5 pillars I have mentioned previously, we have the trading strategy, but also the trade risk and the money management, which are essential to overcome the difficulties or the challenges the market will give you, because the market will not necessarily respond as you may expect. It's not because our red and green slow bias indicators is moving from red to green that we will have necessarily a nice uptrend. It may be a short-lived trend. It's not because it moves from green to red that we will have a nice downtrend. Again, it depends on the market condition. And the market conditions move the market, because the market moves based on the decision of many traders, and among them, the big boys. The big boys make the market, in fact. And if we understand how they think in terms of managing their trade, then we have an edge in our trading approach. Okay, that's it, Chris, for me at this point.
Okay, thank you. And one other question, what if I can't be present for the whole course? I go for it, Eusebio.
So can you repeat the question, Chris, because I have not heard correctly? What?
Okay, what if I can't be present for the whole course? What if I have to do work? What if I'm asleep while the course is on?
What you have to do is wait for the video, because each sessions, all the sessions are recorded. So you wait for the video to come, generally 24 hours after the end of the session, and you will have to watch the video, ask possibly questions in our group, because each session is made within a group, and participate to the following sessions, participate to the scrolling parties, so the practice session when you will be eligible to participate to them. And so do your homework. And so this is what you have to do to learn the MAX, in fact.
Yep, so there's no problem with you not being present during the session itself. We supply the videos, and if you have any questions in the homework, we put you into a training group, and we'll be able to answer any questions that you got in there. And also at the same time that the course itself is running, we run a chat room side by side, and so you log into both of those. And the chat room is there for extra notes to supplement what Eusebio is talking about, because Eusebio does do the training. But also, if you have any questions, you can ask them there and get them answered straight away. So rather than trying to fumble your way through GoToWebinar, this thing is more immediate. And in the video that's sent out, you'll be able to see what questions have come up and what the notes are. That generally me that's pumping them into the group at the same time.
Yeah, okay. I have seen a comment by, I think it was Andrew, about I may be sometimes difficult to understand. You need to know that English is not my primary language. I am a Belgian trader living in France, so this is a double handicap to speak English for me. So I try to make, I know I have a bad accent, but believe me, in the course I try to make my best to be understandable. And if something has not been understood, please feel free to ask. I will never ever be horrified or surprised if you tell me, oh, I have not understood because of your accent. I know that it's not my primary language, so I try to make my best, but nobody is perfect. So feel free to ask.
And I wouldn't worry about it. You'll get used to it, Andrew. yeah, like I don't understand some Americans the way they speak. So, and Americans don't understand Kiwis, so we're all got funny accents. So,
Yeah, yeah.
It's just getting used to it. Your brain learns really, really quickly about these kinds of things.
Indeed.
Okay, and congrats, Sally. See you in the course. Thank you. Okay, and Ralph highly recommends the chat room, the accompanying chat room. I think we're about done, Eusebio. So, one other thing. How about monthly payments? If you ask Craig, he can sort out some sort of drip feed or time payment thing if you wanted to do something like that. But okay, I think we're about done, Eusebio. If you can put it onto the last slide.
Oh yeah, sure.
I think it's got the, and if nobody has any more questions, I'll just wait for this thing to come up here. And yep, that'll do. And the links to the course are in the GoToWebinar chat, and we'll be sending out an email with it all as well. If you want access to the Newswatch information, Eusebio and I will be going through it in a few minutes, and in a few hours I'll have it up on the website, and I'll be sending an email out, weekly email, to tell everybody, hey, the website's up. It's got all the latest Newswatch information, top tier pairs to trade, and times to avoid, times to go for.
Yeah. This
Yep.
is the Newswatch page as updated last week, and so we will adjust it this weekend. So
okay,
yeah,
yeah. So just sign up if you want that information. Otherwise, just watch the page. There's no charge for it. This part is free. We want to make things as helpful as possible for people trading. And what else? Okay, so we'll leave the GoToWebinar open for a couple more minutes, and yeah, otherwise we'll close this down. Thank you very much for coming along, everybody. Really appreciate you being here, and see you in the course soon.
Yeah, and so I wish you a good rest of the week, and so keep safe, keep sane also, and see you next time. I will close the room in 5 minutes from now. Bye, everyone, and take care.
Okay. And can you put up that last page, Eusebio? The PowerPoint?
Yes.
Thank you. Bye, everybody.